Hello, everybody, and welcome to a working lunch edition of Food for Thought. We are excited that you're able to join us today for a session with Cassmer on making value-based decisions in a pandemic and what large companies could learn from small business owners. Cass Ward is a fractional CFO who does strategic and operational consulting using his accounting background. He's also a serial entrepreneur and author of How Much Does It Cost to Make a Donut? We also are fortunate to have him as as an alumni from our executive MBA program, and he is an adjunct instructor in our MBA program, teaching entrepreneurship and managerial accounting. I'm excited to turn things over to Cass Ward so that he can share some of his experience and knowledge with you and talk about how you can apply it in this unprecedented time. Thanks again for joining us today.
Well, thank you everyone for joining us today. Today we're going to talk about just a lot of things that are happening out there and kind of all the wheels that we're kind of spinning in our minds trying to make sense of everything that's going on. So if you can for a moment, I'm going to step away from our presentation here. And what I'd like to do is kind of just talk about a lot of the information that's coming out and really how we react to it and what we do with it. And are we asking the right questions? Are we getting the right information? And what do we do after we put those two pieces together? So what we'll do is we'll kind of start off and we'll just kind of work through some examples, some things that I've experienced in the past, things I teach in the classroom, and things that really kind of hopefully will add up by the end of this. So if you don't mind, we're going to go on over to the whiteboard. Come on and join me. So right now, based on what we're going through, we're all looking for a ton of valuable information. And where we're at, we're working from home, or if we're lucky enough to get to go into an office, we all have access to a ton of information, whether it's the news, whether it's general websites, whether it's social media, but we're seeing a lot of information out there, and we're all going back to 2009. And we're seeing these great memes, these great inspirational quotes that say, just remember 2009, that's when companies like Venmo and Uber and Instagram all started up. And we hear these great success stories, and they're meant to motivate us. They're meant to make us think about, wow, these companies are in everybody's mind today, and all we can think of all the billions of dollars that they're worth at this time. And we look at these memes, we take them into our management meetings, we take them into our staff meetings, and we really are trying to find a way to make the best of the current situation we're going in. What we completely ignore about 2009 is we ignore the Lehman Brothers, the Merrill Lynch, the AIG, the Freddie Mac, and Fannie Mae companies. Long-standing companies that almost overnight went bankrupt. Lehman Brothers is no longer around. Merrill Lynch, AIG, Freddie Mac, and Fannie Mae all had to be bailed out. So now if we have both sides of all of that information, we got to start connecting the dots. And it's not that difficult. When we looked at the left-hand side, all of those were tech-based companies based on iPhone apps. And we even forget at that point that the iPhone was only 2 years old at that point. So for those companies, whether there was an economic downturn or not, none of that information is relevant to what happened during the recession. Yes, on the banking side, Lehman Brothers, Merrill Lynch, AIG, Freddie Mac, they were all part of a bigger regulation and market industry issue. But really, none of that information can help us make decisions. It really, when it all boils down to it, ends up being too much information, which really kind of, my first question would be is if we could run our first poll. And while that poll runs, and we kind of get a feel for where everybody is with where they feel the information is getting, it kind of feels right now like with all the information, it feels like the conundrum I'm in every single day. And my conundrum is, what do I watch on TV? I go out there, I've got Netflix and Hulu and Disney and HBO and networks and every app service, everything that's out there. and I really can't figure out what I want to do. I love it, and I have everything I need. So really, with all this information, we realize none of it's valuable. It's just too much information. So now what I need to do, or you, and in your jobs, in your companies, is you've got to make the discernment of what is good information versus what is bad information. And real quick, before we move on, I'm just going to take a quick look at our poll question results. Right, honestly, we're seeing right there way too much information leading the pack, and some of it's a small amount. And then really the one that I feel I get inundated with over and over is I have no idea what information applies to me. There's days that I feel like I'm part medical professional because I'm trying to figure out what is the vaccine, if it does cure. You know, it took me 3 weeks alone just to understand what flattening the curve means. So we have all this information. We're trying to figure out what to do. And really what we do is we end up sitting at our desks and we put our head down and we're like, you know what, we're going to make it through this. I saw a meme, it was motivational. And I'm trying to figure out what information is good and what information is bad. And I'm really going to just act. I've got to do something. And I have a couple choices of what to do with my companies. I can furlough employees. I can cut costs. I can renegotiate contracts. I can cut costs. I could get a business loan. You know what else? I could also probably cut costs as well. And we've probably all ended in these meetings to say, okay, here's a list of things we can do to survive this downturn. But have I really spent any time of identifying how I'm going to serve customers? How I'm going to identify value drivers, how I'm going to improve the processes within my company, where I'm going to invest my time, and what operational improvement can be made. We're going to throw up the second poll while I talk through this right now, but I worked with a client right now that was a multi-million-dollar construction company. They took a look at this. We had one day before all of the lockdowns or the stay-at-home orders were going to happen. And an emergency management meeting was called into place. And it was, how are we going to deal this? We will not be able to go into the office for the next 3 to 4 weeks. How do we deal with this? And right off the bat, the owner of the company said, all right, I have a list. We have to decide right now what employees we're going to let go. We are going to go to all our vendors and renegotiate our contracts and let them know we want longer terms. We're going to grab every single loan we can. Great. We had a huge list of things to do. However, we never talked about the customers. And actually, looking at the backlog since the stay-at-home order, their sales actually went up. And based on the line of construction they're in, they actually had work. They were beating their estimates from the prior year due to the work coming in. So really trying to find something to do just to have something, some course of action, it was very reactive. It was stuff to do. We had a list of tasks that we needed to do, from cutting down the cellular phone bill to looking at new lease rates, moving the office. Mind you, we never talked about any of the costs of what it would cost to move or disrupt operations. Instead, after looking that we were about to have actually an increase in business over the next 30 to 90 days, we really decided, let's get proactive. Our customers are going through this. Our employees are concerned. We have to make sure that they're just as safe as, and make sure our customers are safe. So we really want to take that time and look at what we're doing. As we were going through all the reactive things, we were kind of just shaking our heads and just putting, we were resigning. The pandemic was going to finish the business. It was all over. Everything in the news, all of the bad information weighed in on us to a point that we could not figure out what to do. We actually heard every bit of information we thought was good. PPP loans, the EIDL loans, all of these SBA loans. We thought, oh, wow, these are our saving grace. The owners, the board of directors had no idea what impact those loans were going to have on the company. They just thought free money. Looking at if those resources were available and applied to our business, they thought, you know what, we could actually use this time to grow our business. By being proactive, let's act on things that will get us to the next part and next phase of our business. So we started asking the question, what is important? And before we move on to that, if we can take a look at the results from our poll 2. How much effort are you putting into your current business? And really, I got to tell you, this is pretty even across the board. I'm working less and getting less done. I'm working the same and getting less done. It's no different than normal, which surprisingly is almost a quarter of the entire poll. I'm working more but getting less done. And the same quarter is I have never been so productive in my career. And it really leads to some questions of what were we doing beforehand and why are things different? It's no different than normal. That's good to know. It's nice to know that there's easy ways to adapting. And the other thing is looking at what is important. I would love to go through these exercises and say this is a one size fits all. Everything we see is so absolute on the information that's given to us that we're going to come to this webinar and Cass is going to go through a presentation to help us define what our value drivers are. And it really doesn't work that simple. So every construction company, every law firm, every type of marketing agency, no matter what company I work with, they all have different issues and different solutions. And they're not hurting as bad as, let's say, the restaurant industry, the travel industry. They depend on everything right now on what the volume of traffic of people coming in their front doors or going on trips. I would love to say that we could address that segment today and have a solution for that. I wish I had the solution for everyone, but it's not that. So what we do, we go to the board. We figure out where are we going to get the biggest bang for our buck? Where are we going to find value within our company? And really, there's only one way to do that. Accounting. Now, before a lot of you log off and say, oh my gosh, I have been tricked and I'm now in an accounting webinar, give me a couple seconds. Let's throw up the next poll. And this is always probably one of my favorite polls to kind of really figure out where our audience stands. I'm willing to bet I know where it is, but one of the biggest issue is with accounting is that we never differentiate amongst the different types of accounting that are out there. We're going to talk first real quick about the ones we're all familiar with: financial accounting and tax accounting. Two completely different practices of accounting. And let me say this real quick. We like to lump accounting into one large practice. I have never done taxes in my entire life. In my career of almost 25 years in accounting, I have never done a tax return other than my own, and that was even years ago. To this day, my mom calls me every April to say, I bet you're real busy because it's tax season and you're doing everyone's taxes. I stopped correcting her about 10 years ago, but in her mind, all accounting is the same. It's not. With financial accounting, it's everything we learn in the classroom. It's everything from increasing revenue, cutting costs, improving margins, maximizing net income. Really, at the end of the day, we want to show that our company can make money and make profits, not only for our shareholders, but our investors, our management team, sometimes our salespeople. That's how we compensate them, through commissions. Tax accounting is a little different. Everything we're trying to do there is to decrease taxable income, show non-cash deductions, take advantage of incentives and tax credits, and minimize profitability. We want to go at the end of the day to the IRS and say, oh, we barely made anything. There's nothing left for us to pay taxes. Both accounting, two completely different practices altogether, always lumped into one practice. If we can, let's take a look and see how everybody feels about accounting. Surprisingly, 33% enjoy accounting and they love being a part of it. That's the highest number I've ever seen. I'm glad to see that there's a large amount of people that understand it's important but find it confusing. That's the majority of it. And they end up shying away from it. They really say they place everything into one bucket. What we're going to talk a little bit about today more is under the line of managerial accounting. Managerial accounting is not a formal practice. Managerial accounting is more back of the napkin calculations so we can understand how to run our business. With managerial accounting, we're going to understand break-even analysis, contribution margin, gross profit, what value drivers, what variables drive our business, how to create a budget and forecast. We're really going to think and dive into the numbers of our company to figure out, hey, what makes us tick? We'll revisit financial accounting at the end of the quarter to see what our past performance was. In April, did we make money? Did we lose money? Did sales increase or did they decrease? With tax accounting, we're going to report our tax liability. We just want to figure out what we owe to the tax person and again, minimize that as much as possible. But with managerial accounting, we're going to gather information so we can make decisions. And really, this kind of goes back to my whole conundrum with watching TV. I went through the same accounting exercise with TV every month for years. The cable bill came in, it was $200, and I complained every month. I had all these channels, and really between me and my sons, we only watched about 10 channels. And I thought, you know what? I've got to do something. I hate paying this bill. I've got to figure out how I can honestly not complain about it, but really get the value for what that is. And I really needed to kind of go through an exercise to figure out what could I do to decrease my cable bill. So what I did is I went out there and I started looking at what the prices of Hulu and Netflix and all of that was that would replace cable. And I said, okay, well, let's see how they stack up against cable. And in the grand scheme of things, $10 a month here, $15 a month. With $30 a month, I was going to save money from what my cable bill was. I needed to really identify what my value was. Saving $150 a month in cable would have been great. But really what I wanted to do is I really wanted to identify the value that made it worth my time to do so. I ended up working with a client for a construction and a home builder here in Charlotte, North Carolina. I was doing some work with them. And they did a lot of large projects, everything from home building and home renovations. And the owner was really getting to a point with all his staff, all his contractors and everything, and said, you know what, I just don't want to do this anymore. It's frustrating. I really like construction. I just don't like what I'm doing. I feel that I'm working too hard for too little. And I said, okay, well, if we want, we can shut the business down. We could figure out what we want to do next. But kind of tell me why you don't like what you're doing anymore. And he says, well, I feel like I work so much, but I'm making almost as much, if not less than when I was doing this for another company. And I said, okay, do you have any projects that you're proud of? Anything that you really enjoy doing more than anything you did? And he said, you know what? He goes, there's one project I did last week. It was a little bit simpler, but it was a screened-in porch. I absolutely loved it. It was a great project. The customers were great. And I said, okay, tell me more about the project. He said, okay. Well, the project that I sold it for $25,000. I said, I knew it wasn't the most complicated thing. It would be more of a niche product and something I enjoyed doing. At $25,000, I went out, I scoped out what it would cost. I took the cost of the project out, which was right at $20,000. And at the end of the day, I made $5,000. And I said, excellent. Why not just do that over and over? He goes, well, it's one of my favorite projects. However, right after we had success, we had some failure. I said, okay, well, why did you have failure if you made $5,000? And he said, well, my partner said, you know what? $9,000 of this $9,000 of this work is for framing. And why should we pay framers $9,000 to do this work when we could do it ourselves? So we stepped in and did the $9,000. And I said, well, that's excellent. So you had $5,000 of that, but you were going to keep an additional $9,000 for the work that you did for framing. And he said, yeah. I said, that sounds great. So really you brought in $14,000. And I said, so why are you frustrated? He's like, I don't know. He said, I would have rather not done the framing. And I said, okay, I'm sure you know why you didn't want to do the framing, but I said, let's look at this. What did it take you to scope out the project and make the $5,000? He said, you know what? I went out, I talked with the customers a few times. I drew up the plans. I quoted everything out. I checked in with the customer every week, 2 to 3 times for 5 to 15 minutes, just to keep them, make sure they were engaged in the project. I probably completely total put in about 5 hours worth of work. And I thought, wow, that's excellent. And I said, I do have to ask you, that $9,000, what did you have to do there? He said, to get the framing up for that and get the roof and everything on there, it took 120 hours per framer, 4 weeks per framer. And I said, okay. And he said, and there were 4 framers. So when all's said and done, I'm making I looked at him and I said, you made $1,000 an hour for the work just by selling it. But by doing the framing work, you made $18.75. And you put in 120 hours over 1 month on one project. I said, do you know where you're frustrated? And he's like, yeah, how do I stop that? And the answer was obvious. You can see it on the board. Just do more work at $1,000 per hour. He could have done 1 more project, worked 5 more hours for that month, and sat at home the rest of the month and not work, and still made more than he would have if he participated in the framing. While we talk about that, let's throw up poll number 4. Do you ever put up a value or value the amount of time you put into the job or process? Do you spend the time to think about, if I do this, it's worth this. If John or Jane Doe does it, it's worth that. We want to do it, but one of the things we do a lot is we love to overvalue our time and undervalue the time of everyone else. And I'll give you a great example. Website. I had a company I worked for several years ago. They needed a new website. The quotes came in at, $1,500 to $2,000. I said, you know what? That's just too much money. I mean, what are they going to do over that time? I'll do it myself. We have Squarespace or Wix or a whole bunch of other processes or programs out there that would make it possible for me to go do this. Why don't I go out and just build this website and save us $2,000? Well, it took me 2 years, and it was probably the saddest website you've ever seen. And I finally gave up. I realized I was a framer all of a sudden. I was working for less than $18.75 an hour. I eventually got that website designer in there for $2,000. They put the website up in less than 10 days. And the first thing I said was, why didn't I do this 2 years ago? Meanwhile, my clients and partners said the exact same thing. Based on the poll question, where do you put value in your time? So pretty fair split by about a third. So we value the time we put into our company, but do we put value into the time that other people's put into our company? Do we think that website person is charging too much? Well, in order for us to realize whether that value is the hours spent, the profitability per the framers, we really need to start gathering our information. And really the good news is we probably already have that information. If we have any type of accounting system, we have a ledger, we have some Excel spreadsheet that lists all of our expenses, all of our revenue. Honestly, even in the worst case scenario, we might even have a shoebox full of receipts. But really, a lot of that information gets overwhelming, and we end up where we started this entire webinar at is, do we have valuable information? But we really need to ask ourselves, what do we have versus what do we need? Do we have available historical data? Are we following industry and market trends? Do we look and measure variables that will affect and add value to our company? Are we looking at what our fixed costs are, and do we truly know what our cost of goods sold are? So even going back to the measurable variables, when do we decide that labor or time is worth every bit we put value to? Had another business owner, actually of a medical practice, a couple weeks ago that had to put some staff on furlough, and she needed to get a ton of work done. And she's like, I'd love to bring this staff member back, but we have to pay her $20 an hour, have her go into the office and contact the customers, run this marketing list. And she said, I don't know how long I can do that, but I do need this task done, but I'm also trying to be mindful of our time. And I said, well, that's $20 an hour. It's not going to break the bank. Is it a good employee? She said, yes, I actually love the employee. I wish I could give her more work, but also I'm not as busy as I should be, and I feel I should be doing things. I said, okay, let's talk about what the cost is for you to go in and do that. And she says, well, I have to get a babysitter. And right there, it all clicked in. I said, well, how much does your babysitter cost? $20 an hour. I said, okay, do you have to factor in the time you drive to the office, the time you drive back in there? She said, yeah. I said, so for a 1 hour task, it's going to cost you 3 times that. And she said, yeah. She said, so it's okay to just stay home? I said, economically, it's the perfect reason to stay home. So we really start thinking about all of the information we have, and sometimes we're too good at it. Really, we have all of this information, whether it's our cost of goods sold, the cost of the labor, or what our profitability is, but sometimes we put too high of a value on it. I worked with a CFO for a nationwide photography company. They were in 47 states at the time. They were looking to go public. And as I was working with them, they had one great accomplishment that they had to talk about over and over. They said, you know what? We're in 47 states. We have X amount of employees, several hundred employees across these states. We do all payroll in-house. And I said, oh, wow, that's great. She said, let's walk over to the payroll department. And I looked, and there were about 7 people. She said, we all do that in-house. And I said, that's excellent. I applaud you. The CEO came in. He was talking. He said, you met our CFO. Is that not great what she did with our payroll department? And I said, it is. But I said, I have a question. I said, I'm counting a lot of people there. You do know that there are several other companies out there that will do payroll services for you. Everything from Intuit, ADP, Gusto, there's numerous. And he's like, yeah, but we don't want to pay that bill. And I said, okay, let's not talk about the bill for a second, but do we do payroll better than any other company? And if we even looked at our competitors, based on us being in the photography business, if we do payroll better than any of our competitors, does that give us any competitive advantage? Does it give us any value? And they're like, and the CEO kind of looked at me, and he said, but we don't pay that. I said, okay, well, you're paying 5 people right now. Your fee per employee, I said, you'd probably be paying another company maybe $2,000 a month. I said, so is $24,000 less than what you're paying these 5 people? And the answer was quite short of get out of our office, which I respected at that point. The question is they had stuff that they deemed value, but it offered no value to their company. So they really had tons of information, but it wasn't what they needed. So we talked about the shoebox, the Excel spreadsheet. What we really want to do is take all that information and we want to organize it. And I have no doubt that most of you listening to this webinar get financial statements at the end of the month, end of the quarter. If we could throw poll number 5 up there. How do you feel about the financial information that is presented to you in your companies, in your job? We get a lot of result reports. We love to create and look at result reports. We love to look at the We also want to know what our performance is. But starting in our results reports, we look at our income statement, our profit and loss statement, our balance sheet, total sales, total expenses. Great. We know whether we made or lost money. Great information to have for any company. For performance, we want to know what the number of units produced were, the hours of production, the number of billable hours, what our cost per unit is, and our rate per hour. But where do we go to get that information? And usually one of the biggest complaints that I hear from people is, I know exactly what I want, but they won't give it to me. They give me an income statement, but I want to know cost per unit. I want to know how many billable hours we had last month. And really what they're doing is they're looking in a rear view mirror of what the actual results, but they actually want to dive down in and see what's continuously happening on day after day. When a customer comes in to our facility, how do we make money from that? Let's take a look at our results for poll 5. So we have a good chunk of people that they get clear and concise reporting and makes decisions. That's excellent. I love to hear that. The reporting is great, but I just don't know what to do afterwards. Fairly common. I want it simple, but I can never seem to get it is a common issue that I hear. And this kind of goes back to what we talked early on about managerial accounting. I want to make decisions. You, as a decision maker, have the ability to tell your reporting groups, this is what I want to look at to make better and valuable decisions. I don't want to see income. I just want to see how many pounds of materials came into our factory and how many units were produced from that material. We can put whatever variables we want that we deem will create some sort of profitability, some value to the company as a whole. As I was organizing my information to kind of figure out if I wanted to go over to the streaming progress, I gathered my information. Me and my boys sat down. We created a report. We talked about Hulu and Netflix and Disney and all those different channels. We put all the prices together. We listed every single television show that we wanted to watch to make sure we wouldn't miss a thing. And we came up over and over again and said, you know what? Not only would we save $150 a month, if we bought movies and television programs month after month, we would still be saving money based on what we couldn't get. So we had all of the information there. We knew the economic benefit was there for us to switch over to cable. And first thing I did was nothing, because I hate calling the cable company and I did not want to call them. So going back to managerial accounting, let's talk about accounting as general, because really what we've done is we've talked about, we're going to gather the information, we're going to organize information, but I really want to drive home now what accounting is. My mom thinks I do taxes. I'm not going to change that. But whether it's tax accounting, managerial accounting, or financial accounting, accounting is just one thing and one thing only. Accounting is scorekeeping. It is keeping the score of the performance for every single company. And the great news is after we gather all of that information, after we organize it into a way, we can report the score of every game we want. And we can see what the home team did. We can see how many goals they scored, how many touchdowns, how many hits, how many strokes they've made. And we can measure it against the competitors. We can measure it against, maybe instead of a weigh-in, it's not competitors. Maybe it's the previous period. Maybe it's the previous year. And we can measure it over and over and over again. The problem is when we haven't gathered that information, when we haven't organized it, when we haven't identified what's valuable, we end up playing 4 different sports at the same time. Whereas in soccer, football, baseball, we're trying to score as much as we can. Soccer or baseball versus football, we're scoring incrementally less, but every point counts tremendously. In football, a touchdown is worth a lot more than a field goal. However, in golf, we're trying to get the lowest score possible. And what happens is we have all of this information, we have it all organized, and we really just get frustrated. We don't even know what game we're playing at that point. Do we want to save money? Do we want to invest? Going back to early on, a company that was going to start laying people off, they started investing in their business and actually increased their marketing spend. They increased their employee headcount, and they're actually getting much more profit at this point. Understanding what game you're playing is important, and it changes consistently for businesses. I've been with an engineering company for the past 12, 13 years. And very early on, we were an engineering company. All we did was we worked with architects, design firms, construction firms. We did engineering work. There was me as a business manager, the rest of them as engineers. We did engineering day in, day out. But we decided eventually we wanted to grow. Well, as we were an engineering company, we all had to assume new roles. We started to have to go out and talk and give seminars and let people know what we do, and we had to express the value. At that point, we became a sales company. As sales started to increase over and over, and we got to a point that we couldn't keep up with the work, we had to hire. We had to hire so rapidly that we ended up having to build a curriculum to bring new employees on. We were no longer a sales company. We were now a training company. And as that company has grown from 4 to 16 employees and is about to grow over the next 5 years, even exponentially greater as it goes into other states, they're realizing their biggest value is teaching people what engineers do and where their value is. They are slowly changing into an educational company. And whether they were a sales company, whether they were a training company, or whether they're now an educational company, they just happen to do engineering. They are no longer an engineering company. So what numbers indicate success? And this is where we get hung up over and over again. If we could throw up poll number 6. If you get all of the information you are looking for, how quickly can you make a decision? And honestly, I'm curious with the results because there's two polar opposites. So let's see how these turn out as we talk about it. But we go right into what tasks can we do? I worked 40 hours this week. I worked 60 hours a week. I track time. I'm going to eliminate contractors. Do all of these mean success? Or am I going to improve efficiency? Am I going to increase margins? Am I going to add value? Am I going to invest in the operations? Going back to how we value time, I still question some of the results that I hear from other clients regarding how much we do or do not value time. Sometimes I think we don't value time the way we think we should. I've had several jobs. I've worked in corporate America, and I'll be the first one to say there was a time I thought I valued time because I worked 12 to 18 hours a day. And it was what was required of the job in order to be successful and in order to improve, to move up throughout the company. My time was very valuable because of the volume. Mind you, I usually completed all of my work by about 9:30 or 10 in the morning. However, in order to be valued within that organization, I spent that time working, showing how hard I was there. And to be quite honestly, I slowly became George Costanza. I worked harder at looking busy than I was actually busy. And really, after about 2 years, decided that's why I needed to leave corporate America. And here's the other thing. That's not the rule. There are areas at corporate America, large companies, small companies, that it does require a lot of time. But when you actually look at the value of the tasks I was doing, I had capacity. I could have done more. It wasn't the most valuable work in the entire company. You can kind of start making decisions on what are we valuing, volume or the amount of work that's done. I put in a whole lot more work developing that website than that website developer did, and probably wasted a whole lot more doing so. When we focus on tasks, management, tracking time, eliminating contractors, it feels like we're just doing work and really tiring ourselves out. It feels like the weight of the world is on our shoulders and we're trying to figure out what to do. However, when we improve efficiency, increase margin, add values, we get the right partners, we find the right contractors, we actually find better ways to spend our time to leverage what assets we currently have, and we move on to bigger and brighter things. I worked with a company that did services throughout the entire United States, and one thing they wanted to do was to eliminate expenses across the entire nation for all of their service technicians. And we put together a system that was it would track every single expense, it would book it immediately, it would get sign off by managers within 5 minutes. It would actually save the company about $130,000 per year in expenses to do this, and it would actually only cost a one-time fee of $10,000 to implement it. They put the system together, they spent the money. One employee complained and said, I don't know if I'm going to want to do this. And all they could think of is, oh, we're going to have to deal with employees complaining. Let's just not save the $130,000 a year. So the project sat. They did absolutely nothing. Just like me, they didn't call the cable company. However, when I expressed to several of the line managers that the 10 to 12 hours per month they were spending on approving expense reports would be marked down to 1 hour a month, they were fighting for this. So really what they did is they didn't value the expenses. They were willing to blow $130,000 in expenses to not have some grumpy employees, where the line managers said, you know what, I'd rather have my time back. And by saving time, they ended up saving the money on top of that. So as we've talked about all these different things, what happens is we get to this point right here, and no different than after I created my spreadsheet, I didn't call the cable company, I did nothing, I did it over again. The cable bill would come in the following month, I would complain about it over and over and over again. Me and my sons would list our TV shows, we'd do this. It got repetitive, it got boring. It eventually came up in one of my accounting classes one night, and the students heard about this, and I put it up on the board. And they said, let's see what you have. And we put all down, we talked about some television shows during our break. We worked it out as a mathematical exercise, and there it was. The number was there, $150 a month is what you would save. And I was like, okay. So knowing I would do nothing due to my hatred of calling the cable company, a couple of the students didn't let it go. They kept saying, well, are you going to do it? Are you going to? And I kind of, was like, oh, yeah. And they were like, no, seriously, are you going to do it? And I was like, I'll get to it when I get to it. I blew them off just like kind of was blowing myself off. One student said, if I could save $150 a month, I'd get a maid. I'd have them come clean my house once, maybe twice a month. And all I could think of is, well, I want a maid. That's what I want to do. And they said, well, it wouldn't cost you anything. You'd be net even if you did that. And as I started putting the value of having a clean house, especially living in a house with 2 teenage boys, that $150 savings was worth $10 million to me based on the damage my boys do to this house. I went home, I made that call, haven't looked back, and glad to be without cable ever since. But what I really did, like I told you before that, over and over, I did the same thing over and over again. I grabbed the information, I organized it, identified the value, I gathered that information, I organized it, I put the score out there, and I really figured out what the net gain and what the success was to me. And I continued to do nothing until somebody said, you know what? You can get additional value from this. You can have your time back. And it really caused me to make a decision. It allowed me to gather information, make assumptions, identify value, forecast the performance, and make decisions and analyze results. And I hate to say it, even after I've done that with the cable company, whether I've done it with a contracting company, where I've seen other partners, whether they're a digital media company, whether regardless of their industry, regardless of the size of their company, this is how they make decisions. Usually what happens time and time again is we do nothing. We do this exercise over and over and over again without actually making a decision. And sometimes the more dangerous pursuit is we make a decision before we do any of this. And we all know that manager, we've all run into them over time. But after we've done this, we've bought into the system, we actually have a path to success. And we know where we're going. And sometimes we're going to stumble. Sometimes we're going to go 3 steps up and we're going to fall off the side. But before we do that, we know what the risk is. We know the risk of making a mistake. And we've identified that if we're wrong about that, it will cost us this. And we can say, you know what, based on the risk and cost of this, we'll choose not to do that. Choosing to not act actually is making a decision. So many people just say, I don't know what to do. And they don't even, they elect to do nothing, not even to make the decision to not do anything. But those that are successful in this continue to value the process, and they do it over and over and over again. So as we're kind of coming up on time, we'll open it up for questions. I would like to say a couple things as Elizabeth starts gathering the questions from the slides. Let me bring up the slides here. A lot of what I shared with you this afternoon, if I may say, you can find in my book, How Much Does It Cost to Make a Donut, and Other Questions That Make Us Hate Accounting. It's available at most places. You can find out more of this information on my website, cassmerward.com. But really what it is several accounting concepts that's reinforced with entrepreneurial stories from varying industries. Some of the stories I shared here, and it also based on a experience I had with the business partner, Kathy, of opening our first donut shop. Additionally, I'd like to say a lot of everything I learn really, while it's through clients, I've learned a lot through entrepreneurs here in the Charlotte area. I'd ask you to check out my series, Influencing Entrepreneurs. I use these as case studies in the entrepreneurship class I teach at Queens. We have everyone from Hugh McColl, social media influencer Corey Smith, Chris Elmore of Avid Exchange. You can find them at these addresses here. And if we're okay with Elizabeth, we can go to questions.
All right. I have not had any questions come through at this time. I had a question about halfway through that was just asking if we will be sharing this afterwards with the attendees. And so for anyone who didn't see the answer to that question, it is yes. We'll absolutely share a link to a recording of this presentation. I'm going to give people a couple more minutes. It looks like we are starting to have a few questions come in. All right, the first question that I have, what is your best piece of advice that you've heard for founders during COVID-19?
Wow, that's a hard one. And that sounds like a Dan Roselli question, to be quite honest. I will tell you what I have, one of the best, I'm working with a company here in Charlotte called Spherical Media. They do a whole bunch of digital media. The best advice I've heard from them is, which should go without saying, is to be honest with their employees. Everybody is worried, and whether the scenario is as dire or as fruitful as could possibly be, the communication they've had with every single one of not just their employees, but their client partners has been extraordinary. They've been able to plan and forecast for not only what can be done and what value they can create for their clients while we are in a stay-at-home order. They've also been able to do it and plan for as soon as those are lifted that it can be business as usual. So I know it's a very generic answer that communication is key, but I cannot express enough how much value that has added to everyone in their company. And they have employees that are working harder than ever now just to make sure success is there for the entire organization.
Thanks, Cass. I've got another question. This one is, they are assuming not, but are asking if it is reasonable to expect their CPA firm to help with managerial accounting.
So I will tell you, this is a majority of where I end up getting involved with a lot of companies. And I don't want to give one brushstroke across the board of this is the answer for everyone. But one of the biggest challenges I actually see with companies is their tax accountant is the one that set up their books. And they set up their tax accounting books in a manner that makes it easy for them to complete taxes at the end of the year, which we discussed earlier in this presentation, is to show the least amount of taxable income. So what happens is they make their job easier, but that value of that accounting information is more for the tax accountant than it is the business owner. And there are tax accountants out there that realize that setting up that structure so there's value to the business owner are out there, but with that value, it's not every tax accountant. Sometimes they're trying to look for ways to make their job easier. What I implore every business owner is to say, this is what I want. I want to gather information so I can make these decisions. And a lot of people, because of their dislike or uncomfortableness with accounting, they don't realize they can do that. They're just like, what's QuickBooks going to tell me? What is my accounting software going to tell me? So I don't want to put that broad stroke out there, but I would say for the most part, I see that creating a lot of issues with business owners.
Right, we've got two more questions, and then we'll wrap things up. The next one is, how have you prioritized building a team while being mindful of expenses in the early stages of building a business?
Well, there's early stages and then there's startup. So the startup, it's hard because your funds are limited. And usually what you're doing is, if you're getting good key talent in at that point, if you're not paying them, you're giving equity. I've been part of the startup world, and there was times that I was the CEO of a company, and Fridays were also the day that I cleaned the toilets. So, you know, it was not a glamorous CEO position that anybody would want at that time. However, was what it needed to take place. However, as long as you're in an early phase company and you can afford the resources, you've got to be able to assign the value that you'll get out of them. One of my biggest failures, going back to that, the website development, is I devalued what the web developer did. I really thought $2,000 was too much. I thought they were cocky. They were worth probably about $5,000 for the amount of time they saved. And we really kind of take it as like, what would the time it take for me to do this versus somebody else, and how much is their time worth versus mine?
Great. Our final question is there a hierarchy you use in determining value? Is there an intangible calculations of sorts used? In this, the example this person gave is something like, can I justify this expense? Not in terms of potential return on investment, but in terms of long-term stability of my staff and keeping people happy, et cetera.
So this I would love. If I have the 5 steps to give you, I would sell it for millions and millions of dollars. The problem is it really, the step-by-step process is no different than this presentation. It's an ongoing exercise, time and time again. And it really, looking back at the other question of bringing other people in the company, sometimes we answer the question the same way over and over and over, that we don't bring in outside third-party objective parties to come in and question the way that we do things. I have no doubt that anybody on this webinar right now could tell me 5 to 10 bad practices in their company. And the question would be, why don't you do anything? They're like, well, it's just the way it is there. Well, that's not an excuse. That's just not making a decision. Why is it bad? What is that costing the company? And what would it take to do that? And I'll be honest, it might not be worth the cost of what it would to fix it, but understanding that's why you're not fixing is just as powerful. So it really is identifying where you want to create the most value. So whether there was a hierarchy and real quick, the other question was part of the question was to keep the stability of the staff, the clients, the return on investment. That's another big trick is how do we do this one thing to make our shareholders happy, our employees happy, our management team happy, and we get stuck trying to find that one silver bullet that will fix all of those, and it gets very, very difficult. So it's an ongoing process that you kind of tackle really week by week by week.
Okay, well, you know what? I think we have time for one more question, and this is off the topic of accounting, but we had someone on the call that was curious about the story behind the photo that you're standing in front of.
Yes. This is a trip that my girlfriend and I made 5 years ago to Zion National Park, and this is Angel's Landing. And yes, that is taken from an iPhone, and it just turned out beautiful on a canvas. So if we want to do a webinar on backpacking and hiking, I could go probably about 4 hours on that. So
I think that does it for us. I wanted to share a little bit with you about the McColl School of Business as we wrap this up, and let you know that our next food for thought will be with Dr. Beth Schneider, who is a professor of strategy and teaches in our undergraduate and MBA programs. And her topic will be on building a personal strategy in turbulent times on May 21st, and that will be one of our happy hour editions. In addition, if you are interested in learning any more about the McColl School of Business, such as our undergraduate programs, our graduate degree programs, our graduate certificate programs, or our Executive Leadership Institute that does customized leadership development programs, executive coaching, and consulting services for organizations, please reach out to mccallschool@queens.edu, and we would be happy to talk with you and share more information. We hope you've enjoyed this session, that it's provided a lot of value that you can take back to your company, and we look forward to having you at the next Food for Thought. Have a great afternoon.